Hi, it's Mark from Magnetic Trading, and it's Thursday again, so we've got another educational tip for you. So today we're going to be talking about risk management and fear. So when we're placing a trade, the first thing we need to work out is what percentage of our account we're going to risk. Now, generally at Magnetic Trading, we advise our clients to go in between 1 or 2% risk per trade. So that means if we lose, we're going to lose only 1 or 2% of our overall account. So if we take for an example, a $10,000 account, and we have a stop of 30 points, and we're risking 2%. What amount do we need to place, i.e. dollars per point, on that particular trade when we buy or sell the trade? Well, it's a simple equation. We work out firstly what is 2% of 10,000, and that's 200. And then we just go 200 divided by 30, and that gives around 6.66. So we'll round that down to $6. So that means that per point we're going to be in $6. So we'll put the $6 amount in the trading ticket, and we'll either click buy or sell. If we stop, we'll lose no more than $200. Now, there's no difference between a big stop and a small stop. However, we do find that newbie traders often lose a lot more with big stops, and the end result should be the same. So if we have a 200-point stop, we're going for a bigger target, and we've only got $200 to risk. Actually, let's just call it a 100-point stop, and we've got $200 to risk. That means that we're going to be going in $2 per point. But if we have a 10-point stop, that means we're going to go in $20 per point. But if we lose, we're still losing $200 overall, which could be 1 or 2% of your account size. The risk is the same, so remember that. Never allow a trade to run with no stop. Now, it's easy for the market to get into a consolidation pattern, whereby it's just bobbing up and down, and maybe you've got stopped out and you see the market come down again, and you think to yourself, you know what, I shouldn't have had that stop, I could have got out at break even. And that could happen 10-15 times and you'll get away with it. But when the market does eventually break out, and you never know when it's going to break out, if you move that stop or don't use a stop, that could be the one where the market never returns and you'll end up blowing your account. So you certainly don't want to be doing that. Which moves me on to failure, really. I mean, it is programmed into us from a young age that failure is just not acceptable to succeed in life. However, part and parcel of trading is you have to fail. You have to get used to failing. Taking, bad trades or getting stopped out of trades that's how we pay our expenses in the trading game. And that's why a lot of people don't make it in trading, because they end up giving up. So how many losses can the human mind actually take? Well, this is an interesting question, and I believe this is why a lot of newbie traders become undone and quit the trading circle. So it's all very well accepting that you'll take a few losses in trading, but the majority do not understand probabilities of their system. So if you understand the actual outcome or probabilities in trading, then you'll get your head around taking a loss, and you'll act far more rationally. Generally though, 1 loss is okay. 2 losses, this is in a row by the way, 2 losses you start to feel a little bit uncomfortable. 3 losses, this is when you're thinking, wow, why is Mark and Cameron just giving me another bad trade? 4 losses, I think I'm going to quit the service. This is the threshold for most. Now, for 95% of people, 4 losses in a row would lead to a very strong emotional attack. Certainly you wouldn't be trusting your advisor, or you wouldn't be trusting your system, and you'll end up giving up, or you'll end up jumping ship and looking for the Holy Grail. Unfortunately, the Holy Grail doesn't exist. There's nothing in life which never ever loses, especially in trading. So let's try and understand probabilities so we can act more rationally next time we get a couple of losses in a row. Let's understand those probabilities. So 4 losses in a row, let's just look at the probability of that. It's a simple mathematical equation. If your win rate is 70%, which is pretty good in trading, your loss rate will simply be 30%. So for the sake of the calculation, we're going to use 0.3 as the losing rate. 0.3 by the power of 4 equals 0.81, which equates to 0.81%. Now, 0.81% is your probability of getting 4 losses in a row if your system has a 70% hit rate. That's pretty good. You'd probably be thinking, chances of getting 0.81% 4 losses in a row, it's not going to happen that often. Well, it doesn't sound like a lot, but it works out at almost 2 times in every 200 trades. So there really is no getting around it. You will at some point, even with the best system, experience a run of losses. I would encourage you not to give up. Remember this formula and keep powering ahead. You don't want to be in that 95% of people that give up, because if you persist at trading, the rewards can be massive.